Good afternoon. I hope everyone's doing well. My name's Ryan Lathan. I'm the Manager of Marketing and Communications at Fort Worth Opera. And welcome to Taxes for Opera Singers, the second
Yay!
seminar of Metropolitan Opera soprano Jennifer Rowley's Summer Virtual Artist Residency. Woo!
Woo!
Today, we have with us a very special guest, CPA Chris Kuhns of Kuhns and Associates, to discuss all the complexities of filing your taxes as a classical singer.
Yes.
Thank you, Mr. Kuhns, for being with us today. If y'all have any questions, just type them in the chat box and we'll try to answer them throughout the session. So without further ado, Jennifer, I pass the mic on to you.
Oh, thank you so much. Thanks, guys. Thank you so much for joining us today. I'm so happy to have my accountant, Christopher Kuhns, who's up in my right corner. I don't know where you guys have him, but he's in Cleveland today, and it just started raining, so hopefully we keep the Wi-Fi good. Chris, I have to say, and I have to tell everyone, Chris has been doing taxes for my family for a very long time. In fact, my 86-year-old grandfather is still doing his taxes with Chris. Chris knows everything about the deductions, the LLCs, the everything. So we're so happy to have him with us today. He has created corporations for many people in my family. He does our taxes every season, and we're so grateful to him. So Chris, thank you so much for being here with us today.
Well, that's a phenomenal introduction, Jennifer. I couldn't do better myself.
Chris is the president and owner and creator of Kuhns and Associates. They're in Cleveland, Ohio. And don't let the Cleveland scare you. If you would like at the end of this call to be in touch with him, he does everything electronically. We literally do all my taxes via email, the phone, all that stuff. So you don't have to worry that he's in Cleveland, Ohio. If you, at the end of this call, do feel like you would like some advice or some help, anything like that, he does everything electronically and has a wonderful team of people over there to help him. As a matter of fact, his producer over there, Courtney, is helping us along the way. Hi, Courtney. So we're going to get started. I'm going to share with you, we've put together a little PowerPoint presentation for all of you with some fantastic charts and graphs that I think you're all going to love because my nerdy heart really loves them. And I'm going to share that over here on my other device. So let me just get everything started over here. Let's pray to the gods of the screen share. Make sure this is going to work. Here we go. Okay, now we're going to take a little detour through my phone. And here we are. Taxes for opera singers, an introduction. So we're going to basically go through some general information for you guys today. A quick overview of taxes and as an opera singer, W-2 income versus 1099 income. So basically employee of a company versus freelance artist. How are taxes taken from checks in the United States? How are taxes taken overseas? And then we're going to discuss the LLC versus the independent contractor. So that's basically the idea of developing your own loan-out corporation or your own S corporation in order to file your taxes and get more deductions. And it's a whole complicated, wonderful mess, but Chris, thankfully, is very good at explaining it. So we are very grateful to have him here with us today. We are also going to talk about what you can and can't deduct. We are going to talk about the importance of a good accountant who really understands the business as an independent contractor. That's when I started working with Chris. And really, I have learned so much about the business, about taxes, about what I can deduct, what I can't deduct, and how to really, take advantage of the system to, help myself along the way and keep everything running smoothly and make as much money as possible because, we're in this to make some money, right? So we got to make sure we can keep our money. All right. So as we introduced already, founder and president of Kuhns and Associates in Cleveland, Ohio, Christopher Kuhns, I'm going to turn it over to you, and we are going to start with the employee versus the subcontractor. So Chris, over to you.
All right, thanks, Jennifer. More than happy to talk about these things. We got two basic taxes we have to be concerned with. First is the federal income tax, which you're all obviously aware about. And also in Texas, you don't have a state income tax, but most states do. So you also have state income taxes. And then the other one is Social Security tax. And, this is, for your retirement, supposedly. You young people don't think it'll be around. When you retire, it will be around, but how beneficial it will be, I don't know. But frankly, most people end up paying more in Social Security tax than they do in income tax. So it's very important that we, spend some time to try and knock that tax down. So
Love it.
So basically, when you get income, it can come in two forms for performances. You're either an employee of a corporation or an LLC, whoever the production company is, where they withhold taxes, or you're a subcontractor. Basically, you're a self-employed person. They don't withhold any tax. You're on your own. You're on a contract basis, and basically what you get a fee for your performance. There are two huge differences. I won't get into the legal differences, but basically, if you're an employee, the Social Security tax, which is 15.3% of your gross income, that is split half between the employer and the employee. So being an employee, you cut that in half, which is a benefit. Number two is tax-free benefits. The big one, hospitalization. If you're an employee and they give you hospitalization, it's tax-free. If you have to pay some of your hospitalization, it's pre-tax. In other words, basically deductible, okay? Other forms of benefits are insurance, disability insurance, life insurance. You get vacation pay, holiday pay. And if you get laid off, you're available for unemployment benefits, which in certain cases you are not, because the state doesn't believe you can lay off yourself. Other states are more generous. So other things, advantages of being an employee are that the employer should cover most of your expenses. So basically, if you have to spend 3 weeks to cover a project or a gig, they should pay your travel costs. They don't always, as Jennifer could probably tell you.
Yes.
But if you're an employee, they should. And you also get legal protections from being an employee. Now you can sue for sexual harassment, wrongful discharge, discrimination. There are all kinds of things happening if you're an employee. If you're a subcontractor, too bad. They say goodbye, we don't like you for any reason. All you have is contract. And of course, then you're also covered for workers' compensation should you get injured on the job. So being an employee has advantages. Big advantages is, big disadvantage, you cannot write off any expenses. In the last tax bill, they just said, no employee business expense. There's one little part of the code that allows it, but I've never seen any accountant, A, know that it's there, or B, use it. It just, 1 in a million would take benefit from this. And a disadvantage is if you're in a state with an at-will employment, they can fire you at any time at will. You still can go back for sexual harassment or discrimination or wrongful discharge, but unless you can really show basically discrimination, it's a losing proposition. I've known lawyers that have tried this and spent a lot of time to get nowhere. That's employees. Subcontractors, a little different ball game. The big thing is you can write off all your expenses, which we'll get into. Two, if you're a subcontractor, you're your own boss. Although you have to be there for production hours and for, rehearsal hours, you're pretty much on your own. You can take off other work as long as there's no conflict of interest. You can do 2 simultaneous gigs if you have the energy and it's not a conflict.
Mm-hmm.
And best yet, you can set up your own pension plan, and we'll get into that. Most of you are very young, so you're not thinking of pensions, but the pensions are the last loophole in the tax law. And I've had cases where I've been able to deduct over $200,000 for a married couple with a pension plan for 1 year. Mm-hmm. So it can be a huge benefit. When you hit the big time, get you set up with the right pension plan. The big disadvantage is you got to pay both ends of Social Security tax, 15.3%. So if you net, say, $50,000, that's $7,500 right off the top, and there's nothing you can do about it, okay? Well, there is something. We'll get to that. But that is it. And then you start thinking about income tax. And another disadvantage, you have no benefits. You got to cover all your own benefits. So you got to pay for your hospitalization, which is deductible, by the way. And you have no legal protection. As long as your only legal protection is the contract you have with the opera house that you're working for that week. Mm-hmm. So that's pretty much the difference between an employee and a subcontractor. Whether or not you can be one or the other, most places will determine that when you sign your contract.
Yes, absolutely. And specifically, most opera houses in the United States, you are a subcontractor. If you are coming in to do a role, for example, a leading role, secondary role, doesn't matter, you are going to be a subcontractor. So you're going to be a freelance artist. They're going to send you a contract covering all of the things that they will give you, which most often in the United States is your travel. Most often it's also your housing, your hotel, but not always. The regional houses in the United States are covering the hotel, apartment, as well as your flight. And larger houses don't always cover that. For example, the Met doesn't cover that. However, the Met does give you rehearsal pay, which is supposed to be used to cover your housing. So there is a trade-off. Even though they don't book your housing for you and make it happen for you and find it, they do give you extra rehearsal fee weekly in their AGMA setup, where you have to find your own and then you pay for it out of that rehearsal fee. But for most houses in the United States, subcontractor is what you're going to be. Now, at the Met specifically, there are lots of employees. There are lots of people now that are on a W-2. It has a lot to do with how much money you're making in that season and the number of cover contracts versus the number of actual performance contracts. So I also know that houses like San Francisco Opera are doing things like that. And Chicago, it seems to be the houses that have a pretty deep cover system where they're actually making people W-2 employees instead of some contractors. But they send you a letter before, all of those houses send you a letter before the season starts and says, we recognize you as an employee. You will be paid on a W-2. Taxes will be deducted from your pay, etc. So that kind of a thing definitely happens. And then if you're brought on as a subcontractor, you get the contract that says, this is what your fee is going to be. We're going to provide this, 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 and this. And then you're responsible for everything else. Does that make sense? Yeah. Chris, should I go on to the next slide?
Let's go on to the next one. Okay,
all right, here we go.
What can be deducted? Okay. I love Section 162. All ordinary and necessary business expenses are deductible against gross income. I love the term ordinary and necessary because in opera, just about anything is ordinary and necessary.
It's totally true. It's so true, Chris.
It is just thing. All right. So, all travel. I mean, you're talking hotels, local transportation, any type of transportation you may have, meals, 50% of meals. They can't get that done. Even your laundry and incidentals while you're on the road are thing. So virtually, if you're on the road, like especially Europe, just about everything is tax deductible.
Mm-hmm.
So keep track of it. Okay, if you get audited, IRS wants to see proof.
Mm-hmm.
So credit cards are wonderful for this purpose.
I always recommend, Chris, singers have a loyalty program credit card that if you're going to fly all Delta, then you should have a Delta American Express, because then you can put everything on that card. Or if you're going to stay in hotels, get a Marriott card, get the Bonvoy card, because then you rack up points for every single thing that you buy. At the end of the year, American Express makes you this wonderful year-end summary, which I love because it separates everything for you into travel, hotels, meals, gas. Everything is separated into little sections in that year-end summary. And then all you have to do is print that off, look at it, make sure everything's business expense, and then total it up. It's great. But the best part about it is if you're earning points, then your vacation becomes free. So you start earning points while you're working, earn your Delta points, then your flights to Vegas for your vacation are free. Or you earn your Marriott points, so your hotel in Mexico is free on vacation. This is literally the best way that I've found to do this. And all these cards have a business card and a personal card. To me, that doesn't matter so much because I always put everything on one card anyways. But I'm telling you, get yourself into a loyalty program, fly only one airline if it's going to be an airline card, and then use those miles for free vacation. This is the best thing I can tell you because I love it. I mean, you do a European audition tour, you fly on one airline, you use their partner airlines overseas, and then you rack up like hundreds of thousands of points and you have a bunch of free flights for you and your husband or your family or your kids to go on vacation. It's a no-brainer. Okay, sorry, Chris. I just wanted to add that in.
Hey, Jennifer, now I know how you keep such impeccable records.
Yeah.
I've seen some of those year-end summaries, and they're very good, and they're awesome. They really do a great job, and you can easily, use that as proof for IRS, especially when you show the contracts that said you have to be in Copenhagen or Berlin or Paris. Mm-hmm. So, no, that is it. Besides that, and besides, IRS has tried to, but they haven't gotten Congress to make those free benefits taxable income. So IRS is working on it, but Congress, well, they have bigger things to be concerned with. So
let's hope they don't do that.
they just put it aside. So, but some of the other things that you have are costumes, makeup. You have to use unique makeup for this. As far as clothes are concerned, if you can wear them on the street, then they're not deductible. But most of these opera costumes you can't wear on the street. Now, that's if you have to pay for them. But if you have to buy special things for doing interviews or whatever to get the gigs, then you have to, I would deduct those costumes. And pretty much anything you use for performances. Then you got your coaching. You're doing continuing coaching, continuing education, all your audition expenses, all your agent commissions, and of course, if you have to go see your agent, all the travel costs involved, all the cost involved in going to the audition, all your office expenses, postage and computer, whatnot, your cell phone, very important. You can deduct that. Marketing, photos, websites. If you have a piano, you've got your piano right there, Jennifer, right? We can, there we go. We can write that off. If you buy one during the year, you can write the whole thing off, even if it's a baby grand. I've had professional violin players write off some very expensive violins,
Violins.
and bows too.
Absolutely. Chris, I just have a question popped up in the chat here, and I'd love to put this in this little slide here.
Sure.
Can you take a per diem on contracts? Alexandra, yes, absolutely. That's where your meals and actually some of your housing can come in as well. So I never keep receipts for my meals because the rule, and Chris, you can confirm this if I'm wrong, I learned the rule to be anything under $60, you don't need to keep that little receipt. You can have your credit card statement or whatever to prove that you paid it. So I don't know about you guys, but I don't, when I'm on a gig, I don't eat $60 worth of food every day. So I don't keep those little receipts. But what I do is I look up at the very beginning of the gig what the government mandated per diem is by day for that state and that city. And I take that on every single gig. So I don't figure out, you know, I spent $50 this day eating food. I spent $100 this day. I went to a nice dinner, blah, 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 blah. I don't do that. I just take the government mandated per diem. I believe in New York City, it's $75 a day. I times that by the number of days and boom, that's my deduction for my meals for that trip. The same thing can be said for hotels. The same thing can be said for your housing. If you pay an invoice for an apartment, obviously that's the easiest thing to use to turn that in. But if you're paying multiple things and you want to just take the government mandated per diem for the day for housing, overseas, that actually gets to be pretty high. I think Paris is actually like $300 and something a day for housing. So if you stay in a cheaper hotel, you could take the higher deduction by using the government mandated per diem. So yes, absolutely. And there is an app for that. There's an app for the per diems. I can't remember the name of the app. However, it has a little suitcase on the front of it on your phone. And you can just put in your city and the month and year, and you can find your per diem for that city at that time. And I just have those apps right on my phone and I can look that up for every single gig. So I thought that would be good to mention here on this slide with the deductions.
That's excellent.
Great.
And yeah, the per diems are pretty generous.
They are.
You really stay in first class hotels, and they have different per diem for high places like New York, Los Angeles, San Francisco would be Paris, London, and the same with meals, high price meals. You probably would not spend that much money on meals. If you did spend that much money on meals, you couldn't fit into your costume by the end of the performance time.
Yeah, exactly.
That's a lot of pasta.
That's a lot of pasta for sure. But, you know, sometimes you do want to go out and have a nicer meal. So,
sure.
You know, on the days where you like took takeout Chinese and, you know, the next day where you go out to a very nice restaurant, they balance themselves out if you've taken the government mandated per diem. That's, you know, yes, Anna Montgomery, host gifts, absolutely deductible. The tips for your dresser and your makeup artist and your wig stylist, all those are deductible. But because you're doing those in cash, you definitely want to keep record of that. I usually keep the ATM receipt and I just write on top of it the name of the person that the tip went to, and I put it in an envelope, and I have like a little envelope for every single one of my gigs. For different tips and gifts that I gave out. Even your cards too, like I know people do show cards. They do toy, toy, toy at the beginning of a run or a goodbye card. Any of that stuff, completely deductible, all of it, and 100% deductible. The only time you get into the 50% versus 100% is with your meals. So if you're taking a networking meal, so like if you're meeting with your manager and you pay for the meal, that's 100% deductible. But if you're on a job and you go to dinner while you're on contract, then it's 50% deductible. So that's the only time. But if you are buying gifts and tips and things like that, then that's all deductible. I just saw a thing about tips up here. Is there a typical amount for show tips? Yeah, Julia. I like to give $20 per show. It really depends on the level of the house. So at the Met, almost always I give $20 per show. It also depends on the amount of work. So I've definitely given my dresser at the Met $25 and even $30 a show at one point, because I had like 5 different acts and 5 completely different costumes and 3 different wigs. And, you know, that's a lot of work. So I'll bump it up if it's, you know, a lot more. In regional houses, it tends to be $10 to $20 a show. So regional houses like Nashville or New Orleans or something like that, usually that's $10 to $20 a show. And then the bigger houses is $20 to $30-ish a show. But I always say $20 per show. I mean, they're there all night and they're working with you all night. You know, your dresser is there for you every single time you change your clothes. Your wig stylist is checking on your wig all through the show. Your makeup artist is touching your makeup up all through the show. So I definitely tend to make it $20 for everybody. But I do know people who they'll do $10 and then they'll also buy a gift. So instead of giving $20, they'll give $10 in a Visa card or in cash, and then they'll buy a small little gift to put with it, like a little bottle of wine or something like that. So I know people that do that as well. So I also know people that give very extravagant gifts to their dressers and things like that too. So, I mean, it's really just a matter of what you can afford and things like that. But I definitely do go by the level of the house and the amount of work that they're doing. If I feel like if it's above and beyond $20 a show. Does that make sense? Yeah, good. Oh, thanks, Julia. Good. I'm glad that helps. Okay, shall we move on to the next one, Chris?
Okay, that's great. Yes.
Here we go. S Corp.
Just one more thing to add.
Okay.
If you don't know whether or not it's deductible, list it anyways.
Got it.
We cannot, you know, if we don't know about it, we can't sit there and say anything about it. But if you list something and it's not deductible, we just don't deduct it. And
perfect.
If it can be, do it. So
perfect.
List anything and everything that has to do with opera, singing, performing, trying.
Office. I mean, your office supplies, that's a big thing. I mean, you use your iPad or your iPhone or your laptop or whatever every day right now, right? And your microphone that you've bought and your halo light that's in your studio for making your recordings and this and that, all that stuff, if you bought it new, put it on your taxes this year. It's all deductible. Even if it's just a tripod to hold your phone up, you're using it to make videos, you're using it for social media, you're using it to market yourself, it is deductible. If you boost a post on Instagram, it is deductible. If you boost a post on Facebook, deductible, because all of that is being used for marketing. And it's all, I mean, if you buy a ream of paper at Costco to print off some music, deductible. If you pay for a score, deductible. So all of that stuff, keep track of all of it because it really is, it's all deductible. Okay, let's move forward. S Corp compared to sole proprietorship.
All
here we
right.
go.
There's where we
good
have
stuff right here. This is good stuff.
Yeah. As I mentioned before, Social Security tax is basically the greater tax until you start earning basically close to 6 figures. So there is a way around it. Okay, and that is S Corp. If you're
and guys, we should say S Corp just so that you know, these are the loan out corporations that we're talking about. So Singer's forming an LLC, Jennifer Rowley LLC, which is my LLC. So Singer's forming their own small corporation in order to take contracts through a corporation and not as an individual. So just to clarify for anyone who's never heard this term before. Sorry, Chris, go right ahead.
Okay. Basically, the gist of this is this thing in the law that says if you're sole proprietor, you're independent sole proprietor, then all net earnings are subject to Social Security tax at a rate of just on about 15.3% less a little bit. So in this slide here, you get gross 100,000 and you have 40 in expenses, they're deductible. But that 60,000 net is subject to Social Security tax, okay? Which in this case is almost as much as the income tax. All right, that's somebody that's got a gross of 100,000. There is a way around that, and it's the S Corp. And basically the S Corp says you become a corporation or an LLC. You can use both. Basically it says you're not going to pay corporate income tax, but you personally will pay tax on all the profits. Basically the accounting is the same. The deductions are the same as a sole proprietorship, but income from an S Corp is not subject to self-employment tax. Now, that's huge. Here we got 9,180, and with that, we'd have zero. Now, if it's that good, you know, something's wrong with it, and there is a catch. Because you are this president and the main performer in this corporation, you have to take a reasonable salary. I love the term reasonable because that gives us a little leeway, you know, and, you know, when they start using the word reasonable as an adjective for legal fees, like we'll give you X dollars plus reasonable legal fees, that really expanded the term reasonable. All right, so basically you have to take a salary, and because you're so important to your LLC or S Corp, I like to make sure that it's at least 50% of the profit. Okay, if you know, if you're not important, we can lower it, but in this case, let's face it, without you, the performer, the corporation's worthless. So making an S Corp is extremely simple. Virtually all states now, you can get an LLC online. I prefer LLC. They're just a little easier to work with than corporations. And IRS says an LLC can be made into a corp if you wish. So basically, all you have to do is file an S Corp election. And that's a 2-page form. I did one this morning, and it takes about 15, 20 minutes. To get an LLC online, usually if it's probably a half an hour and they do it a second time, it's 15 minutes, okay? Very simple. Most states charge around $100 fee to the state. You used to pay $700 to $1,000 to an attorney for this. No more. You can do it yourself. Your accountants can do it. Frankly, I find it's a great loss leader.
Yeah.
You have the client for years, and it's not a big expense to get one.
Mm-hmm.
So it's a very simple process. Don't let them tell you that it's highly expensive. If you're an S Corp, like this shows, you have to take a salary, and that salary is subject to Social Security tax, okay? But in this case, it's close to 50% reduction. And what we did here was have a $32,000 salary on a $60,000 income. So you pay Social Security tax on $32,000, and you don't pay it on the $28,000. In both cases, you're going to pay income tax on $60,000. There's no way around that, as we've already worked that down from 100 by including all possible expenses. So the savings is $4,284 in this case. There is more accounting work, and depending on that, it's $500 to $1,000. The biggest thing is you get payroll is horrible as far as the paperwork involved. One paycheck, this would be in Ohio, but in most states it's about the same. One paycheck triggers over 20 tax returns. It's ridiculous, but that's the way it is, all right? Most of them are very simple. It's just a lot of paper, that's all.
And this is why we highlight having a good accountant for that paperwork, Chris, right?
I remember, yeah, I remember we set you up. I mean, you in Florida, Jen, and
yeah, in Florida.
And taxes in New Hampshire, there's no income tax, no state income tax, which is a big help. because New York's bad with the meth, and
New York is very bad.
yes,
Yes.
and California's bad.
But I will say that in New York, for those of you who live up there and who, possibly do covers at the Med and things like that, it is much better with the LLC than it was as a freelance artist, because in New York, there's the self-employment tax. And I believe it's still 11%. Is that right, Chris?
Oh yeah. New York City tax can get up to 11%.
It's terrible. So now you're not self-employed anymore. If you're an S Corp or an LLC, you are employed by your own corporation. So that 11% self-employment tax is no more. So as a freelance artist on a 1099 without a corporation, you're going to pay that 11%, and there's no deductions off of that 11%. You just have to pay it. If you are an LLC and you pay yourself a salary, then you are not self-employed anymore. So you don't have that self-employment tax. And I don't know how many other states are like New York, but that was a big one for me. I mean, I think the last year, that was a big one. The last year I was in New York and was an independent self-contractor, I believe I paid $15,000 in taxes, 11% to self-employment. And then the next year, I think I paid like $5. It was such a huge difference. So it's, when the time is right to make your S Corp or your LLC, it's really, and especially in New York, it really does become worth it. I should also tell you guys that you do have to, if you decide, let's say you decide today that you want an LLC and you go online, you develop your LLC, you get your tax ID. Okay, great. The future contracts that you have, you need to write your agent or write the house, and they need to reissue the contract to your LLC with your tax ID and pay you on the tax ID, not on your social security number. Because if you pay on the social security number, it's much more difficult to kind of figure the tax. So if everything just gets paid on that tax ID, it makes everything very easy. And then the corporation pays to the social security number. But the houses, you're going to have them, basically, they just reissue the contract, you re-sign it, they put the tax ID, you give them your business bank account number so that the direct deposit goes into the business bank account, or your check and you deposit into your business bank account. And then your business bank account pays you as the singer, whatever your payroll or your decided salary might be. So you have to make sure that when you do this, and if you do have upcoming gigs, that you make that extra step of having the future contracts reissued to the LLC and not to your person, not to your individual person. Anything else we want to say here about these corporations, Chris?
Yeah, well, that's an excellent point. Yes, you want everything done in the name of your LLC or corp.
Mm-hmm.
Should they issue you a 1099 and your social security number, and for work that you did after you got the LLC set up, okay, we can get around that. But it's very important that we see the 1099 and know that. Mm-hmm. Okay, so basically we put it on a Schedule C, like a sole proprietorship, deduct a like amount as amounts assigned to the corporation, which is totally legitimate. So the net is zero, but the computer matches up the income they get from the Opera House with your tax return, and you don't have any problems. Mm-hmm. One other thing I would like to mention, and this is totally kind of off the record, but it's statistical fact. Most of the audits we see are for sole proprietors, unincorporated people, or single member LLCs, where they file on a Schedule C, they pay the total Social Security tax. Most of the audits we see are for those. For these small S Corps, which yours would be, we probably do at least 150 or more every year, and we've done them now for probably 25, 30 years. We have never seen an audit.
On the small LLC or S Corps, yeah?
as long as you take a salary, you know, we have a thing that, and the salary is the real gray area. And we have a saying in taxation, pigs get fat and hogs get slaughtered, okay? Be a pig. Be a pig. Try and keep that salary as low as possible. But if you're a hog, IRS is going to come down. It's a red flag. They're going to say 100% of the earnings are subject to self-employment tax. So that's why I say for performers, I like it at least 50%. But
yeah.
So that's very important. Another thing that we didn't mention is foreign. In Europe, that's where a lot of the operators are. You've spent a good deal of your last several years in Europe, Jen.
Yes, definitely.
They withhold taxes from their payments to you.
Always. And there is zero way to get around it. Italy is going to take their 35%, and that's going to be the end of it. You're not going to see it. And guess what? You're not going to be able to get it back. You can try, but
just
it's not going to come back to you.
However, you can take a credit on your tax return for taxes paid there. So if you pay $20,000 in taxes to the foreign, you can reduce your United States tax by $20,000. So you can reduce the income tax. So basically, you spend considerable time in Europe, you're not going to pay any income tax. Social Security tax you do pay.
Right.
We can't offset that one bit. So that makes the Social Security tax even worse. So,
but Chris, as an LLC, we get to take the credit. That's right. From whatever you pay overseas, you get to take that as a credit. And am I correct? The credit rolls, right? So if you don't use it in 2018, it rolls to 2019 and 2020 until you need to use it.
Until you need it. And it's a complicated formula basically on how much credit you can take. Basically, if the European rate's higher than your rate, you only get basically the US rate, generally speaking. So, but the rest does carry forward. And so basically, if you perform a lot in Europe, you're not going to pay much US tax. So Social Security tax is the one you want to attack.
And that you can attack more with the LLC than as a sole proprietor.
Oh, the LLC is everything then. So
yeah. Absolutely.
If you're making a livable wage, there's no thing. Virtually, like I say, we do over 150 of these small corps, well over that. We do not do any sole proprietorships that make a living. You know, side jobs and that, we do it where they make 10, 15, 20,000 a year,
Yeah.
But if you make a living during this, you are an LLC, and it's so easy to set up.
Yeah, it's so easy, and it's so easy to maintain it too. Let's talk a little bit more about those deductions. I have some fabulous pie charts coming up. I love my geeky pie charts. So basically what I did was I took my earned income from 2017, just a random year, and I showed you here in this pie chart where I made that income. So you can see that the bulk of my income in 2017 was made at the Metropolitan Opera, so New York City. I was an LLC at this time, so we avoided, thank God, the self-employment tax because over 60% there, I would have had a lot of tax. Also, we've got the Carramore Festival, Baldwin Wallace, which is in Ohio, church job, it looks like, Toledo in Ohio, Finger Lakes Opera, Nashville Opera, and some private lessons. So we've got multiple states on here with some tax. But you can kind of see how the earned income broke down in this pie chart here. So then what I did was took my deductions from 2017 and put them into a pie chart for you. So what you can see here is that the travel, housing, and the meals and incidentals, which is my per diem. Like I said, I take the meals and incidentals per diem rather than saving the receipts. The travel, the housing, and the meals and incidentals, those are the three biggest pies that you see there. The fourth biggest, the blue one, that's medical. So that's my paying my own health insurance. That's paying for my prescriptions. That's if I need to go to the ENT and have a scope and pay for it. I don't remember if I had any surgeries this year or anything like that. But so you can see the three biggest pies: travel, housing, meals and incidentals, and medical. And then, of course, agent commissions. Those agent commissions. But, you know, listen, they do a lot of work for us. And so they get 10% of everything that we make. So that's why it's a big chunk of the pie. But all those agent commissions are completely deductible. And then you see the sixth largest is social media. So that's paying for my website, that's paying for photos, that's paying for marketing, that's paying for boosting ads, that's paying for all that stuff. So you can really see in this chart, like what I spent my money on in 2017. And really, you know, this is pretty consistent across the board. Travel, housing, meals, and incidentals, those are always going to be your biggest chunks. So that's why I really recommend that credit card, having that one credit card that you put all that stuff onto, take the points for it. I mean, really seriously, you're gonna spend, you know, if you're a job back to back gigs, you're gonna spend $60,000 a year on this kind of stuff. They're business expenses. You know, if you're living in New York City for the Met and you have 3 contracts, like $5,000 a month or $4,000 a month for 3 to 4 months, that's $12,000 to $16,000 right there. You know, it's, if you get the apartment through a company and you can pay on a credit card, pay on the credit card, take the points, and then make a big payment to the credit card. You know, it's really, I mean, taking those points and then going on vacation in that case then becomes major. All right, so we got that pie chart. Then what I do is I take all of these expenses and I put them into a deductions worksheet in Excel. And now I am sharing you the Holy Grail. This right here, this is my personal tax deductions Excel worksheet that I send to Chris via email every single year.
It looks familiar.
And he loves it because it's super organized and nerdy and wonderful. So the first page of the Excel worksheet is the cover page where I total everything for Chris. So I put up at the top, you can see employer, the dates I was employed, the amount I made, and I comment on the job just so that he knows I worked there in 2 shows. Like the first line is Metropolitan Opera, Cyrano de Bergerac, and Tosca. So you can see I had 2 contracts there during 2017. So, and then I total everything made at the bottom. Then I total for him overseas taxes paid, and I convert it for him from the foreign currency into the dollar amount. And then I total that all for him. I didn't have any overseas taxes that year, so that's why that's empty. But then I put that for him there. And then in the bottom, and it's a little bit hard to see, those are all the deduction totals. So the first one is AGMA union dues, education, postage, photos and videos, phone and internet, scores and office supplies, research, charitable donations, agent commissions, PR management, personal grooming and costuming, audition fees, MIE travel, so that's meals and incidentals travel, networking meals, transportation, housing, taxes, corporation fee, because your corporation fee is deductible, personal website, health insurance, medical expenses, foreign wire transaction fees. So if you get a payment from a foreign bank, you're going to get paid a transaction fee. You're going to get charged a fee for that. So write that off too. Tips and gratuity and a gym membership. And then I total all those deductions for him. This is the front page. Okay. So when Chris gets this, he can look at this and he can quickly, you know, go through what he needs to go through. Then the pages after that, I go into more detail. So then I set up a page, and let me go, actually, here we go. I set up a page for each job. So at the bottom, you can see wages and compensation, audition and performance, voice teaching, and then each job that I had has its own little tab. All right, so that year I had FLO, Toledo, Kiramore, Med Opera, Nashville, and Baldwin Wallace. So I set it up like this so that in more detail, and I'll go back to this one, in more detail, he can now see where I spent my money, okay? So in the, I'll go back this way, wages and compensation worksheet, audition and performance worksheet, this is what I have for him. I have set up my MI&E rates, my meals and incidentals, and travel. The top one is Euro auditions, USA auditions, and then I have it broken down by city and by job for him. So he doesn't have to go into the big worksheet. He can sort of see this here for me under auditions and traveling. And in here, I total everything up for him. So every single city, I just make a total of the meals and incidentals rate. I put it right in the chart, I total it, and then he can see literally every dollar I spent on travels, transportation, housing. It's all in one place for him because he doesn't want to go search through all my pages unless he has to, right? So if he has a question, then the next pages are broken down into more detail where I have this information by job. So I'll have the MIE travel, the meals and incidentals travel, and I'll break it down. I was there from these days, that city $75 a day, therefore this is the total. So he can go then further and see the details of what I spent just in case there's a question. And that's for, you know, those deductions that maybe he's like, she put this down, but I'm not sure what she means by this. Then he can go in and see. We talked about the housing rate, travel, planes, trains, automobiles, luggage fees, all that kind of stuff. These are the easiest specific deductions. So I make sure that these are all in one place for him because, you know, you can do an initial calculation with these numbers and kind of get an idea. All right, so then the worksheet pages, like I said, we get the wages and compensation, the audition and performance deductions, and then each job gets its own little page, okay? Where then you have everything organized under that tab. All right, so hopefully that was super helpful. And if anyone wants to see more of that Excel geeky worksheet, I am happy to share it. We can create an email list and get it to you, but let's have some time for some Q&A. So if you guys have questions, throw them up into the chat and I will give them to Chris. Chris, we have one. Oh, are you able to share this presentation with us for future reference, Aaron? Yes, absolutely.
If you're an
we'll
up and
have
coming and you have several different side jobs.
Yes.
And basically the side jobs you're probably getting a W-2 on, but you're still probably spending money on your opera career. So keep track of all those expenses. And even if you don't make a profit on the opera, if you're not going to make a profit, it's probably not worth it to set up an LLC. But we'll do a Schedule C. And if that shows a loss, that loss then can offset the other income you may have from the side jobs. So it's still important to keep track of all your expenses, and hopefully you'll have some pretty good income as well.
Absolutely. Aaron wants to know, how often do you file your taxes? Do you file quarterly? Are you updating your spreadsheet after each gig? So Aaron, I'm really bad. I don't update my spreadsheet after each gig, and I really should, and I don't. And then I annoy my husband for a week in February and make a complete disaster of my house with paperwork and highlighters and markers, and then put everything into the chart on, literally it takes me 4 days to finish the chart. So I always feel really bad because I make a complete disaster of my house for 4 days trying to figure out where everything goes. I should do it every single time I have a job at the end of that job, but I don't. So I would recommend you do it, but that's, you know, me talking out of school a little bit. How often do you file taxes? Do you file quarterly? We haven't filed quarterly. And I don't know if we will be doing that now because of some things that have come up through COVID. But I do know a lot of people do file quarterly. But I think that, and Chris, I'm going to throw this over to you. It may depend on the income level. Like if you're making $40,000 singing, maybe you want to just file at the end of the year. But if you're making $200,000 singing, maybe you want to file quarterly. But I'll let Chris field that part of your question, Aaron.
there's another nice, very nice little loophole. According to the law, the taxes should be paid evenly throughout the year, and quarterly, the quarterly estimates in April, June, September, and January. But there is a way around that, and it takes some discipline, and as I say, financial discipline. If you take a salary, you withhold taxes from that salary, and those taxes are considered evenly paid throughout the year. Now, we've had like doctors or lawyers that make a lot of money. They won't pay anything all year long. We'll give them a salary of, in this case, it'd be substantial. But if their taxes are $80,000, we will deduct $80,000 from their salary. And they got to have a big enough salary to do that. And then that $80,000 is considered paid as if it was $20,000 a quarter. So there's no penalty, no interest. So, but the thing is, if we do that withholding tax, you have to have the money to pay it in January, okay?
Right.
If I do the withholding tax and you don't have the money, we have problems, because if you don't pay withholding taxes, the laws are very strict. So, but you can pay quarterly estimates, or you can pay it all once at the end of the year, or you could do a combination of both. Because let's face it, the money's not necessarily evenly made throughout the year.
Yeah.
So some people just pay a minimum quarterly and then catch up at year end. Because at year end, you have an idea how much money you made. You don't know in January, but you do know in December.
Mm-hmm.
So, and it's very important. And with every one of these S Corps that we do get with them near the end of the year, so we can determine a salary. And hindsight's always better than foresight. So we determine a salary based on how you did during that year and estimate the deductions, and that determines the salary, that determines the withholding tax. So you do have a choice between quarterly or year end, whatever you're more comfortable with, but be darn certain you put some money aside for taxes. There will be taxes. I'd like to think that there weren't.
I'd like for there not to be two, but there is, or always is.
Yeah, oh yes.
Yeah. Alexandra wants to know, should you wait until you reach a certain income level before you become an LLC, or can you get one at any income level? Chris, what do you think?
Well, because there are costs in maintaining it, I said like 500 to 1,000 additional over and above what you'd pay for your tax return. And it can go up from there if you get involved with pensions or that. I would say you have to net at least $20,000 after expenses for it to pay off. Because, you know, if you net $20,000 and you take a $12,000 salary, you're not going to save that much money. Okay.
Right.
So
you want to be making money. You don't want your corporation to be losing money. You want to be able to pay yourself money. Yes. So you need to be making enough money to take the business expenses out of that, and also have money to run the business and also pay your employee, which is you. So you have to make sure you can do all of those things before you get that LLC. And believe me, when I got the LLC, it was the best possible thing I ever have done. And a lot of accountants that I had talked to prior to getting the LLC were like, no, you shouldn't have it. There's this, there's a complication, there's a this, there's a that. The only complication that I have had is that in Florida, the law is that the officer of a corporation cannot collect unemployment. So I cannot collect unemployment in this COVID-19 insanity time. So I have not gotten any sort of unemployment, and thank God to Fort Worth Opera for helping me out through this. We love you so much. But you know, it's just, it's something that Florida does not allow. And I know there are several other states that don't allow it, but most states do. So, you know, if you're an LLC in New York, you have to check the law and see if you would get paid unemployment at this time. But honestly, that's the only hiccup that I've run into. We did have a small issue buying our home and getting a mortgage where the mortgage company wanted to see the LLC income as well as the personal income, because most of the money comes into the LLC. But, you know, Chris was wonderful and made a form for us for the mortgage broker to show the bank, and everything was very, very clear, and we got the mortgage with no problem. So it was just like one extra step. So don't let anybody tell you, oh, you'll have a problem getting a house. Oh, you'll have a problem buying a car. No, you won't. No, you won't. Just from personal experience.
Yeah. Bankers are not, you know, they don't understand these things. They only understand a pay stub and a W-2.
Right.
But on the same token, we get around that all the time.
Yeah, and we can get around it easily. I mean, like I said, Chris was super helpful with that. Yeah,
no
sorry, Chris.
There. I would say, you know, if you net after expenses greater than 20,000, it starts to pay off.
Yeah.
If you want to know a limit, that's what I would use.
Yeah. Okay, Julia wants to know, I'm an employee at a music school where I'm a W-2 employee, but my gigs are 1099s. Can I still have an LLC?
Absolutely. Yeah, we have plenty with LLCs that have W-2s as well. So that's it. They just fit two different lines on the tax return. That's all.
Absolutely.
So absolutely, yes.
And Julia also wants to know, and what about my joint income with my husband? Will we have to file taxes separately? Does that make a difference when I'm making tons less than him?
No. You can file jointly. That has nothing to do with filing joint or separate.
Yeah.
There are some cases where it pays to file separate. Now, you know, we take that into account with all the facts, not just the LLC income, but the wife's income, the husband's income. They pretty much have to be about the same to save money.
Yeah.
But no, that has no effect on filing joint or separate.
Julia, if it helps, Ray and I file jointly. So we have two tax returns. We have one corporate tax return, which is all the LLC income on that. And then we have our joint tax return. And my income is the salary paid from the LLC. So the income that comes into me is the salary paid, and his income is his salary paid. And you just do this regular joint tax return as you normally would.
Can I add to that?
Yes, please do, Chris. Yes, absolutely.
No, your income is the salary you make plus the profits from the S Corp. That's a flow through corp. You pay tax on the profit personally. So we add those two and then whatever Ray earns. Yes.
Sorry. Yes, exactly. Brenna has a side question off of this. Does this all still apply when you file your taxes with your spouse who typically files standard and not itemized?
Well, here's the deal on that. If you figure out which is better, standard or itemized, standard's getting to be the standard anymore because it's up to $24,400 now, okay, for a married couple. If you file separate, you each have to do the same way. One cannot itemize, the other take the standard. You both have to either itemize or both take the standard. So.
Makes sense. Anne wants to know, do we have a business credit card and a personal to keep things separated for easy reporting? So I'll answer this two ways. I 1000% have personal bank account, business bank account, okay? Personal credit card with that bank account and business credit card with that bank account. And the best thing to do is to really make sure you're kosher. Go physically to the bank in the state in which you are going to create your LLC and set up your business bank account in person with your signature on the line, just in case anything ever happens and questions your residency. Just go to the bank and take it. If you're going to set it up in Florida at your grandma's house, whatever, make sure you go to Florida and go to the bank. Don't come right now because it sucks here. Go to the bank and sign that line. Okay. So I have those two things. Now I have to admit I am a bad girl and I do not have two American Express Delta credit cards. I only have one. And this girl I am a points whore. I love the points. Okay. So sadly, Anne, I am bad and I put everything on one credit card. And then I have to go through that wonderful, beautiful Amex year-end statement and I highlight all of the things that are business income and leave the stuff that I know was personal unhighlighted. And then I have that year-end summary in a folder every single year, but then I take all of those things that were business income and I enter them into that spreadsheet. So if you want to be super easy, put everything on one credit card, don't mix your personal income, and then take that year-end summary and hand it to your accountant. But if you want to be nerdy and bad like me, just put everything into your Excel sheet and it doesn't matter what's on that year-end summary and you give it to your accountant. Then if you do get audited, you've gone through, you've highlighted everything already, everything's already organized, you have all of that in one place and you know, this was personal income, this was business income. Chris, do you have any recommendation as far as that is concerned, or is it just kind of how you want to run it?
Insofar as what?
Insofar as, would you like to see like all of business income on one credit card with no personal income mixed in, or does it even, does it matter to you?
If you use one for business, that's preferable, much preferable. Like you say, if you use one for business with personal, you've got to go through and
you've got to go through and highlight out what was actual business income or what was actual business expense and what wasn't. And so that's why it takes me 4 days at the in February.
It's just more work because some just give us that year-end summary.
Yeah, exactly. And you
do
can
the nice record keeping you do, okay? And some use a personal credit card, which magically becomes business at year end. So you really have to strike out a lot of the stuff. The dog food is not deductible. So
so you have to make sure that you go through. But that's why I have that worksheet. So
yours is beautiful.
I put everything into the worksheet. I don't send him the year-end summary. I make that big worksheet and I send it via email and then it's done. So for me it works and I get all my points.
And I don't have to spend the 4 days. And I don't have to spend the 4 days with you while you're going through the house and yelling. Poor Ray has to do that.
Exactly. Okay, Christine Phillips wants to know, and I'm going to give this directly to you, Chris. Can you briefly discuss the difference between the S Corp and the LLC?
Well, the LLC can't elect S Corp treatment, okay? So they're one and the same. LLCs are relatively new. They were invented in the 90s. But before that, you always had to have a corporation. So basically, IRS looks as an LLC. If you want to be taxed as a corporation, an S Corp or a C Corp, which we never deal with performers. If you want to be taxed that way, then you just file a 3-page form with IRS and you're taxed that way. So no, LLC, S Corp, one and the same.
Fabulous. Thank you. Okay. Anne wants to know, I have heard you have 3 years to start making real money before the IRS considers it a hobby. Is that correct?
Oh, yeah. Well, yes and no. Okay. There has to be a pleasure factor in it. I know you enjoy performing and whatnot, but that section of the code is really aimed at horse breeders. Okay, that's where you really have the thing. There has to be a degree of pleasure in it. There has to be considerable money. They'll lose $200,000–300,000 a year, a horse breeder. An opera singer might have small losses. So no, if you have losses every year, I don't see a problem with it's section 274 to be exact. So
amazing. I love it.
Yeah, I don't, you're not going to go on losing money every year, you may enjoy the performing, but I see no problem with section 274.
Yeah. Anne wants to know, do you bother with any receipt apps or for random deductions, or do you always count on per diem and Amex reports? So Anne, I definitely keep some receipts. So if I have, let's say I paid for a car from the airport in Barcelona, you can't pay for that on a credit card. You have to give them cash. It's just the way that they roll. So I make sure I get a receipt for that. And every single job that I have has an envelope. I have a manila envelope with a little tab, and all of the random receipts that I paid cash for, and it's important and deductible, go into that envelope. So then at the end of the year, I can go through those envelopes and say, okay, well, this wasn't on a credit card. I need to add it into my worksheet. And you'll have those, you know, like we talked about the tips and the gratuity before. Obviously, you're not going to have a receipt for that. So you need to make sure you kept the ATM receipt for the cash that you took out. So you remember to deduct that, and have a record of what you used it for, and have the name of the person you gave it to. And like I said, taxis where you've paid in cash, or, you know, let's say you bought something at a store, like at the Apple store or something, and you paid in cash, you didn't have your credit card on you or something like that. Those receipts you definitely need to make sure you keep. So at that point, maybe a receipt app is helpful for you to keep track and to continually keep track, but make sure you keep those physical receipts, especially when you're over $60. So anything 50 overseas, 50 euros and up, I keep the receipt. Especially car service, because car service from any airport in Europe is going to be at least 40 euros, if not a little bit more. And taxis, because they don't have the just swipe your credit card like we have. But because they have, you know, started using Uber, which is awesome, Uber and Lyft and things overseas, you can just print out whatever credit card that you have your Uber on, and then you have it all there. But if it happens that you get off the plane, it's 5 o'clock in the morning, and you need to get a taxi and you need to pay cash for it, make sure you keep that receipt, because that is deductible. Chris, do you have any recommendations on any receipt apps that anybody else that you work with uses?
I can't remember the name of it. In a way it's good, in a way it's not good, because what happened is you can double include receipts because the app does it, and then they also take the credit card. So you end up putting them in twice. I just, you know, if you have a little diary keeper, all you have to do is have a timely kept record. So if you just have a little handheld little booklet, date, so much on cap, it works.
Yeah.
And if you get audited,
and then put it in your worksheet.
Right, then you go through your little booklet at the end of the year and throw it into your worksheet. But any timely kept record works. Cab from here to here, X euros.
Yeah. And also, guys, if you're driving to your gigs, because right now we may not be flying right away and you're driving to your gigs, make sure you do keep a notebook in your car so that you can write down, I went from this address to this address and I drove this many miles, because you can deduct, is it 54 cents on the mile now, Chris, or did it go back to now? Oh, it's 58 cents. There you go. So you can deduct 58 cents on the mile that you drive in your personal car to whatever work that you're doing. So, you know, if you're physically going to a church gig or something and you're getting a 1099, put your addresses in and keep track of that mileage, because that's actually quite a big deduction when you get to the end of the year and you've built all of that up. And also, you know, you're using your own personal vehicle, so that vehicle is depreciating. So you want to make sure you take that deduction. Now, you don't do the gas. You don't keep every receipt for gas. But if you pay a toll, or if all of your mileage, things, if you wash your car, you know, things like that. But the gas becomes, you don't pay for that when you deduct the mileage. So, or you don't deduct that when you deduct the mileage. So make sure you're keeping track of that. You know, if you, let's say somebody has concerts and you decide you're going to drive to Pennsylvania to do a concert, keep that record of what address you started at, address you finished, how many miles that was, and then make the calculation, because that's quite a big deduction, especially when we're driving, you know, long ways. It's really, they're super helpful deductions. Anna Montgomery wants to know, especially if we're filing ourselves, any advice for negotiating filing from multiple states or working in other states than where we live?
Boy, that's a loaded question.
Thanks, Anna.
Typically, if you earn money in another state, you're subject to tax in that state. Okay. If it's a minor amount, a few $1,000s, you don't mess with it, because then you'd have to prorate your expenses as well as the thing, and the tax is minimal, and it costs you a lot to do it, and it costs them a lot to process it, and they don't get much money. Obviously, if you do a lot of the Met, as you're well aware, then you have to file in New York. California is very difficult, because if you're a subcontractor, they still deduct California tax. Okay, so it forces you to file in California if you want a refund. They have a minimum $800 fee to file a tax return. An S Corp, you have to pay them $800 just to file the return, and then income tax on top of that. So, and then if you have a refund coming, okay, they'll say, we put this refund aside to apply to next year's tax.
No.
Yes.
Scandal.
It's horrible. California, that's the,
Scandalous.
Scandalous. Scandalous, yeah.
Wow.
California,
I had no idea.
Horrible. They're horrible to deal with. All right.
Erin says she's just not going to file in California then. Okay.
Well, you just avoid it. And even if you have a few $100s coming back, kiss it goodbye. And that's it. So
awesome. We'll take one more question and then we're going to wrap it up for the afternoon. We have one from Megan. What is the best way to keep track of / report private lesson income from teacher and student perspective? What do you think about that, Chris? So like when we earn a Venmo payment from a student, just as a private lesson, either in person or on Skype, what's the best way to sort of report that and tally it up for you at the end of the year?
Well, it's all taxable income. Obviously, it gives you more support to deduct your office at home, because you have to use like in your case, your little thing and your piano.
Guys, Jennifer Rowley LLC pays rent for this little room right here. Yes, paying the rent.
Okay. And of course, any expenses, music is the big expense you have to pay. Our deductible, you just have to keep track of it one way, shape, or form. There's no real thing. Any type of Excel spreadsheet is fine, but you just keep track of the money you have coming in, and it's all taxable. So.
Yeah, Megan, I have an Excel spreadsheet for mine, and on one side, I have everybody's names listed, and then I have dates across the top, and whenever they paid, I just put if I have multiple people on one day, then I have 5, little payments in there. And then at the very end, I just sum the line for the end of the year and say, 2019 lessons for such and such person, this much money. And then if Chris needs to see how many lessons were taught or when they were taught or anything like that, we can refer back to that Excel sheet and see, who had a lesson when, how much did they pay, how did they pay, things like that. I'm finding that it's very easy to sort of keep things in the Excel spreadsheet, but I really wish that Venmo had a year-end summary. And I was not able to find one last year, and I'm super bummed about it, because I really do think that if Venmo printed out you received payments from this person on these dates for this much money, I feel like that would help us all so much. So if anyone ever sees that happen, please send me a DM on Instagram, because I want to be the second person to know, because you'll be the first and I want to be the second. But yeah, so I just find the Excel sheet, super easy to keep everything tallied up. And I will add this, because I've definitely heard of people doing this. If you take voice lessons from one teacher, and let's say over the course of the year, you paid that teacher $4,000, $5,000. I have definitely heard of people giving that teacher a 1099, especially if you have an LLC. because you're basically paying someone for a service and it's over $500. Chris, what's your opinion on that? Because some people hate it. It's very taboo, but how do you feel about it?
Okay, here's the deal. $600 is it. If you pay them $600 or greater, then you should send them a 1099. Now, these are for lessons they would be giving you, which are deductible by your LLC. Right? You need that continuing education. Then if they're individuals, not corporations, then you have to send them a 1099. If you're an LLC / S Corp, people do not have to send you 1099s. That's in the law, okay? But if you're a sole proprietor, they have to send you a 1099. So yes, you would have to send a 1099 out to this individual. I know there are a lot of people that pay $599 a year
just so they don't have to. Yeah.
for those services.
And some people get I don't know why they do, but some people get really offended by it. And I'm not sure why.
Because they got to pay tax.
Yeah, I guess that's why. But I've definitely attempted to give 1099s to a teacher before and had him say, I'm not giving you my social security number for that. And it was a big, humongous mess. So just be aware if you are teaching private lessons and somebody gives you a 1099, it's actually okay. It's a normal thing. And it should happen. It should, I pay my teacher like $5,000 a year with all of the coachings and things that I take. Yeah. So yeah, he should claim that income. I'm paying it because I'm going to deduct it. I'm going to totally deduct that $5,000. So if I get audited and then they say, oh, well, so-and-so didn't claim all that, you paid them all that income, well, then they're in trouble, right? So just, if somebody hands you a 1099, just take it gracefully and claim all of your income. It's you're making it, so claim it, especially if it's being paid to you online. If you're getting paid via Venmo or Chase Quick Pay or PayPal or something like that, it's all trackable. So if you get audited,
they have to send out, tell IRS how much money they pay you, all of these credit card and all the other services. They have to tell IRS how much they paid you. So IRS knows. And frankly, you don't have it in your profession, but we've seen it in others, where if the ratio of what they see compared to total receipts, if it's not there, count on an audit.
Yeah. And you just want to make sure you have all of your bases covered, because wouldn't it be nice to sit down with that auditor and be like, you're wrong. I got everything. I got you.
You would get a gold star.
I know I would get a gold star. I'm like, I know I would get the gold star because I have everything taken care of. So I know that if somebody, if the IRS comes to Chris and says, we're going to audit Jennifer Rowley and Jennifer Rowley LLC, I know I have records for everything. So even if they say, oh, well, where's this receipt? I'm going to be like, here, it's in my little manila envelope. Here you go. Yeah. So it's just the best way to do it. And don't fudge anything. Don't bump up any numbers. Just, leave everything as it is, but track everything. And that's the biggest thing. Like Chris said towards the beginning of our chat here, if you aren't sure if it's deductible, put it in anyways. Put it in, and then your accountant can make the decision if he feels it's deductible or not. And if it, if it reflects what's written in the law and is reasonable, which we love that definition now of reasonable. So just, keep everything, keep track of everything. And really you are your CEO of your brand. I am CEO of Jennifer Rowley and Jennifer Rowley LLC. So the image that I put out is deductible, right? My marketing materials are right here. So if I bought MAC makeup to go to my audition and I need to look, you need to look a certain way, I'm deducting that makeup, right? Absolutely. If I bought a beautiful gown to sing on the stage at Carnegie Hall with, such and such orchestra, I'm deducting that gown because I paid for my own costuming, and I'm not going to wear a ball gown down Fifth Avenue in Manhattan, right? So I can't wear that on the street, so I'm deducting that. You know, my comfortable shoes to sing in, I'm deducting it. The bag I carry to rehearsal that fits all my scores, deduction. You know, even if in your mind you're like, I'm not sure if this bag is deductible, put it on the list, because there's so many things that you wouldn't think are deductible that actually are. And you know, you've spent the money on your business, you're the CEO on your brand, and, you know, claim them as expenses, and make sure, you know, you take ownership of that and you keep track of that. And, you know, at the end of the year, your accountant, like mine, will be very happy with you. So Chris, I just want to thank you so much for being with us this afternoon. Yay. Thank you guys for the applause. Love you. Thank you guys. Thank you.
All right, Jennifer, thank you. It's been a real pleasure here.
It's always a huge pleasure to chat with you.
If anybody has any questions, they can send me an email.
Yes, thank you. That would be awesome.
And you've got my email address, so.
I do. We have your email address with Fort Worth Opera as well as I have it. But let me say.
To send an email. The tax deadline was yesterday, so I have time to get back to them.
Absolutely. Yes. And if anyone wants anything from this chat, if you would like to have Chris's email, if you would like to have the Excel sheet, if you would like to see the recording, whatever, please send us an email. We are happy to provide you with something that you might need. We will have this recording up on the website. And Ryan, are we going to put it up on YouTube too?
Yeah.
Yeah, and on YouTube. So you'll be able to watch this back. So if I went through too fast through my little fancy pie charts, you can watch it back at a later date. And I hope that you will all join us this weekend for our competition class with Ken Benson. Oh my goodness, it's going to be so much fun. I had a conversation with him yesterday, and he just was like, I want to tell them this and this and this. And oh my gosh, it's going to be so much information. You all are going to just, your brains are going to explode. So we're so excited about that. And then we are going to get into conductor week and acting week, and it's just, we have so much stuff lined up for you for the rest of the month and into the last week of July and the first week of August. So we are very excited. And Chris, we thank you so much for being a part of our content and really sharing with us your expertise and all of your advice. So thank you so much, Chris. Thank you.
Well, you're more than welcome. It's been my pleasure.
Thank you. Ryan, I throw it back to you.
This was awesome. I wish I had this information when I was a singer. I felt blind for years, and this was great. So thank you so much, Chris. It was really wonderful.
I really enjoyed it. It was fun, and it's great to see all these young
smiling faces, right?
Someday, like
I love it. It's wonderful.
Well, thank you, Jennifer, and everybody. Have an awesome afternoon, and we will see you on Saturday.
Thanks, guys.
So long. Okay. Bye-bye.
Bye. Bye.